Alrighty, guys, so we have a lot of companies to break down in this video. A lot of them actually just reported earnings, whether it was this morning or just after the bell here around 30 minutes ago. We're going to break down a bunch of those companies and some stocks in general that I'm looking at. But before we do that, before we dive into the video, do not forget to get up to 16 free stocks for Moomoo, guys. I'm telling you, it's free money. Just use that link down below or go to stockerfest.com/Moomoo. And mind you, each of those stocks could be valued up to $2,000. Once you open up your account, you get one free share of stock right off the bat. Fund your account with a little bit of money, at least $100. You get 5 more stocks, totaling 6 stocks. And fund your account with at least $1,000, guys. You get 10 more stocks on top of the 6 stocks, totaling 16 free stocks. So if you guys want some free money and you want to help out the channel, use that good old Moomoo link down below. And with that being said, cheers, guys. Let's dive right into the video. So check it out, guys. The markets today were kind of all over the place. Well, I guess the Russell did very well. The Russell went up 2.7%, which you guys probably remember, especially if you caught my videos from earlier today. But other than that, the NASDAQ pretty much broke even. The S&P went up 0.25%, barely, and we had the Dow pretty much at break even as well. And the crazy thing is, guys, the VIX is now in the 13s. The VIX went down over 5% on the day, which I'll probably make a video just solely on the VIX, maybe tomorrow, maybe the next day, whenever I get to it. But this is just getting insane, guys. The VIX is now at a low on the 4-hour chart, on the yearly chart, and now on the 3-year chart as well. Yeah, because the low from a couple months ago, or when was that? Actually, no, about 2 years ago. Gosh, guys, I forgot I'm looking at the 3-year chart. The low was at 1410 at that point, and we just hit 1395. Yeah, the VIX is getting destroyed. And let me see the low on the max chart. Don't tell me, okay, we're not near all-time lows. I was going to say, don't tell me we're at all-time lows on the max chart. No, we're not anywhere near those. We hit 856 back in 2017, which is nuts now that I'm thinking about it. But we definitely are at a multi-year low. Now the VIX is getting to levels that it has not been at since before the pandemic. 2019, 18, that time period, which, guys, that is pretty crazy. So with that being said, we're not going to talk too much about the markets today because we kind of talked about them earlier, and I don't want to just repeat myself in these videos, guys. So we're going to break down these stocks that I'm looking at, which the first one is Dave & Buster's, ticker symbol PLAY. They just reported numbers after the bell, and you guys can see we have a head and shoulders, which, I mean, that's the overall chart pattern on the 4-hour chart. But if we zoom in a little bit on the 5-day, you're going to see Dave & Buster's is ripping after the bell, guys. Holy crap. We closed at 33.75. Now after the bell, we're up to around 35.20. So we're up 5% on top of the almost 6% the stock went up on the day. So we're up over 10% now from close yesterday, which I think this closed at $32 yesterday. So we were in the low 30s. Now we're pushing mid-30s on Dave & Buster's, and we're also, I think we're breaking out of the moving averages. Yeah, we're breaking out of the 180 SMA on the 1-hour chart, and I believe on the 4-hour, no, not quite yet. We're above the 50 SMA on the 4-hour chart, not quite yet fully above the 180, which is right around here, guys, 35.50. So let's see what happens with Dave & Buster's moving forward. Let's see if we break out of that neckline, which obviously would be ideal for the bulls, or do we end up getting rejected in the in the mid-high 30s, which you guys can see 35, 36, 37. This has been resistance ever since the middle of March. Time will tell, guys. Time will tell. But overall, right now, we are seeing the stock make a big move. And let me see what the earnings are before I forget, guys. They did $1.45 in EPS, which beat the $1.24, so that's awesome. And they ended up missing on sales, $597.3 million versus the $601.71 million expected. So they beat EPS, missed on revenue. Not seeing anything here on guidance. Actually, wait, it says here Dave & Buster's sees rise in Q1 revenue, or I guess that's the revenue that they just reported. Okay, yeah, that is Q1 revenue. So we're not seeing anything on guidance for the next quarter, for the year, but overall, the market's eating this up as they just reported earnings about 30 minutes ago, and we're moving up a nice chunk here, 5% after the bell. Another one that I want to talk about, guys, which honestly I can't even remember the last time I talked about this company, but they just reported earnings, which is why we're going to talk about them and break down the stock in this video. We're talking about Stitch Fix, guys, ticker symbol SFIX, which went up 7% on the day. Pretty nice day. And here after the bell, look at that. We're up around 14 cents, which for a $3 stock, hey, we're talking about 4%, 5%, not bad. And at one point, we were up 12% as the stock shot up over $4 per share after the bell initially when the numbers came out. So let me see what they ended up doing here, guys. Looks like they did negative 19 cents EPS, which beat the negative 30 expected, so that's good. And they ended up beating on sales, $394.91 million versus $388.94 million expected. So double beat there, beat EPS, and they beat on revenue. It looks like here they reported 3.47 million active clients in Q3 versus the 3.46. So pretty much right in line there with the estimate. Not bad. And let me see, anything else on guidance? Not really seeing anything else, but overall, double beat there for Stitch Fix, which, I mean, guys, for a stock that's beaten down, that's really all it takes for that to move the stock, right? I mean, this thing was at $6 a couple months ago, and don't even get me started on where it was during the bubble. I mean, at one point, this stock was at $113 a share. Could you imagine, guys? People were buying it at that point. Not knocking you if you did. I mean, we all do stupid stuff at the end of the day. I've done plenty of dumb crap, guys, trust me, in life and in the stock market, which this is not a life channel, this is a stock market channel. But, you know, I've done a ton of dumb crap. And I mean, think about it. People were buying at 110, 13, 100, which is nuts. Now we're at $3 a share, and maybe the stock is finally turning around. I don't know. Would I think it's ever going to go back to 100? Heck no, guys. I think it's never going back to 100 unless a miracle occurs. I mean, think about it. For it to go back to 100, it's going to have to 35x from here, which that is, let's just say that's not a bet I'm willing to make. But could it go back to 5, 6? I mean, sure. If we look here on the 4-hour chart, now we're starting to see an inverse head and shoulders. We're breaking above both moving averages now that we just reported earnings, and the stock went up 7% on the day. And after the bell, it's up another whatever it's up now. I mean, 5, 6, 7%. So it's up a ton. Now we're starting to break out of the moving averages. The right shoulder starting to form on this inverse head and shoulders, and really the next main level of resistance that I'm looking at here is right around, let's see, kind of where we are now, honestly. Ooh, so it's going to be a tough spot right here, which you guys can see initially at about $4 and $4.10, or that is the resistance. But initially, when the numbers came out, that's where we ran. We ran to 410, and we got rejected pretty hard twice, actually, at about $4, $4.10 here on the intraday chart. So let's see if Stitch Fix could push through 4. I have no doubt in my mind, if we push through 4, we're going to get some momentum probably towards the mid-high 4s. You guys can see here, if I extend this line to the right, back in the beginning of October, back in the middle of November, back in, you know, the middle of January, we were struggling at 470, 475, and that's the next main gap to fill, you know, if we break 415. That's the next resistance that I'm looking at. So Stitch Fix right now, I'm gonna let the dust settle a little bit. I'm gonna be on the sidelines, but if it could break that 415, that would be a huge spot, and I would consider taking a trade. Let me actually set my alert at 415. There we go. And another one that I want to talk about here, guys, is Thor Industries. I don't know if you guys know. You probably don't know, honestly, but they manufacture, produce, all that good stuff. RVs. You guys know that movie RV with Robin Williams? Yeah, that's RV, an RV. You guys maybe have ridden in one, I don't know, but they do all that good stuff. And look at their stock today, guys, up 17, almost 18% on the day, completely breaking out on the 4-hour chart. And yes, we are overbought for those of you guys that are going to, type that in the comments, but it's extraordinary how great of a day today, was. It's crazy. Now we're approaching a multi-month resistance for this stock being about 93 to 94 bucks, which you guys can see we failed there back in the middle of November, back in the middle of, January. end of February, and that's where we're testing now. So if this could break just on a technical basis, $95, I'm telling you guys, this could be a big mover and the momentum could continue. But of course, again, like I said, it's overbought. I mean, you could argue that all day, which it kind of is. So for that reason, I'm going to let the dust settle a little bit and see how the next couple of trading days go. And for all we know, maybe we do get a little pullback. I don't know. Maybe a pullback, but it's too early to tell. I mean, we just had earnings this morning, so we have to give it a little bit of time, but it looks like they did $2.24 EPS, which beat the $1.07 estimated. Are you kidding me, guys? What the heck was that analyst smoking? I mean, geez, they completely destroyed EPS, and they beat on sales, $2.93 billion versus $2.83 billion expected, and it looks like here EPS for full year is a good chunk higher than the estimate. That's great, and it looks like here full year 23 EPS is well above the estimates, which is great. So yeah, I mean, Thor Industries, guys, they might not be the most sexy business model, selling, manufacturing RVs, but it's the stock is moving 18%. They're beating, they're raising guidance. So yeah, can't complain. Let me know your thoughts in the comments down below about Thor Industries. And the next one here, guys, is Cracker Barrel, ticker symbol CBRL, which didn't do nearly as well as some of the other companies that we talked about today. It actually went down 4.5% on the day, and you guys can see it's awfully oversold on the 4-hour chart, and now it's at $93 a share after being at $121 back in the middle of April. Not long ago, guys, we're talking about a month and a half ago, it was at $120. Now it's at $92. It is down 25% during that time period. So Cracker Barrel, they ended up doing, let me see here, guys. Looks like they did adjusted EPS of $1.21, which missed the $1.34, so that's not good. And they missed on sales. Oof, $839 million or $32 million versus the $846 million expected. So double miss there for Cracker Barrel. And honestly, guys, I don't really go. I've never had Cracker Barrel. I'm not sure if you guys have had it. I heard it's somewhere where my grandma and her boyfriend go to. I'll be honest. That's they go to Cracker Barrel. I heard it's a lot of the older crowd. Not knocking it, but I've never been there. Have you guys been there? Is it good? I don't know. Let me know in the comments. But look, they must be struggling. Let me put it that way, because they missed EPS, they missed sales, and let's see here. Comparable store sales decreased 4.6%. Not the best sign. Let's see here. Comparable store restaurant sales. Okay, retail sales and restaurant sales. What's the difference there? I gotta look deeper into that. But that actually increased 7.4%, the comparable store restaurant sales. And it looks like here, anything else on guidance? I mean, they still have a dividend, which is great. They maintained it, didn't cut it, didn't raise it. They maintained it, which is good. And I'm not seeing anything else here on guidance. Oh, wait a second. They see Q4 total revenue growth of 1% to 3%. So don't expect anything crazy coming out of Cracker Barrel when it comes to growth. And it looks like here, did they report in the morning? I believe they were. Yeah, when the earnings came out initially, guys, the stock was at $86. Oh my gosh. So at one point it was down 12% from close yesterday, which is not the best sign at all. So those are the companies that just reported earnings, guys. In full disclosure, I'm not in any of those companies, and if I had to buy one of them, I'd probably go Thor Industries after we get that pullback. We'll see if it even pulls back. I don't know. My alert's at $95. We'll see what it does at that point. But yeah, those are 4 companies that just reported. And if you guys have not gone up to 16 free stocks yet from Moomoo yet, what are you waiting for? Each of those stocks could be valued up to $2,000. Just use that link down below or go to StockSurfest.com/Moomoo. All the details are on there, guys. I appreciate you all, as always, for all the support. Without you, this channel would not be possible. And now let's quickly break down some other names that I'm looking at here. I think Shopify did very well today yet again, which, guys, not to toot my own horn, but did we not call this out yesterday? Today it went up another 6%, $3.75, and now it's completely breaking out of this channel that I drew out yesterday. And well, now it looks like mid-60s is right around the corner. We might be going there tomorrow, later this week, next week, I don't know. But to me, guys, this looks like Shopify's breaking out. Momentum, it's in the favor of the bulls, and it does not look like it wants to slow down anytime soon. Let's just say that. Let me see what else ended up moving today. We had CRM make a decent move. which you guys can see CRM starting to consolidate around that 180 SMA at about 202, guys. That's a big spot here for this particular stock. Let's see if we actually get a pop, maybe towards 220, maybe 225 on CRM. That looks like it might be happening. We'll see. Of course, nothing's guaranteed, but that's CRM. Let me see. Let's do another one, then we'll wrap up the video. It looks like here, guys, what else ended up moving today? JD, Square, okay, CCL. Yeah, look at that. I mean, JD's now finally starting to reverse since, for the first time, rather, since the beginning of February. And by reverse, I mean it's starting to move above the moving averages, which you guys can see. We've been rejected by the moving averages every time we've tested them over at least the 180 moving average over the past couple of months. Now we're starting to, reverse. And in my opinion, guys, if this could clear back into the 40s, that's where the bulls are really going to start to kick off. And you guys probably saw Michael Burry did buy JD.com. Not saying I'm going to follow his trade or just tell you guys to blindly do that, because that's not smart. Do not do that. Don't do anything based on anybody, whether it's Warren Buffett, Bill Gates, freaking, I don't know. I don't even know why I said Bill Gates, but you guys know these big investors. Don't blindly follow anybody. Don't follow me, any other YouTuber, nobody. Don't follow anybody, right? But overall, in my opinion, based on the trend, not what Michael Burry did, but based on the trend, we're starting to reverse, and the highs from back in the middle of May were right around $38. If we start taking those highs out, we start breaking some key levels, guys, that's where momentum could really turn. And now, am I saying it's going to go all the way back up to 65? It could, but I'm not banking on that in the short term by any means. I'm actually looking for a move maybe from 38, 40 bucks, maybe to the mid 40s. I mean, you guys can see mid 40s, that's where we were in the end of March. That's more reasonable in my opinion, and that's kind of what I'm looking at here on JD. My alert's at 40 bucks. I might as well put another one at 38, maybe 50, and we'll see where it goes from there. So with that being said, guys, I'm going to wrap up the video. If you enjoyed it, hit that like button, make sure to subscribe, and don't forget to get up to 16 free stocks from Moomoo, each up to 2,000 bucks. Use that link down below. Open up your account. You get 1 free share of stock right off the bat, and fund your account with at least 100 bucks. You get 5 more stocks, totaling 6 stocks, and fund your account with at least $1,000, guys. You get 10 more stocks, totaling 16 free stocks. So if you guys want some free money and you want to help out the channel, and again, each of those stocks could be up to 2,000 bucks, use that Moomoo link down below. It is greatly appreciated. And now, cheers. I'll catch you guys in the next video.